All right, welcome back everyone to another market recap. Today is Monday, December 23rd, 2024. It is the week of Christmas, so hopefully you guys are all having a good holiday. But today was a trading day, so we're going to talk about it. If you can't tell, I'm back home in Washington. So usually I'm filming in Idaho, but this is where my family used to live in Washington, and we are here for Christmas. So I am going to be here for a couple weeks. But with that, let's talk about the market today and what happened. And today should be incredibly valuable. Also, if you're new to my channel, my name is Jake. I make daily videos on ICT concepts, market recaps, trading concepts, and my channel is essentially the ultimate place to get better at trading. So as well, I have a trading Discord you can join. So definitely go check that out. The link to that is in my bio. And if you need any help with trading, just message me on Discord. And yeah, I'm still working on getting better too, but we're all working on this together. So going into today, we had, on Friday, we had this daily candle react to this weekly fair value gap. So here you can see this weekly fair value gap right here. It's the gap between the low of this wick and the high of this wick. So that's the weekly fair value gap. And you can see how the market responded to this. So based off of this like aggressive wick into this weekly fair value gap, wicking below this consolidation here you can see this is a clear accumulation range. The way we wick into this weekly fair value gap is very telling. It tells me a lot, and it says like this is probably going to be a manipulation, right? The way we wick into this fair value gap. So we also had SMT with this low and SMT with this low. And you'll note that right here, this is actually a daily breaker block and fair value gap right here. So not only was it a weekly fair value gap, but it's a daily breaker block fair value gap setup as well. So there you can see that. Anyway, we got SMT there. So my bias was bullish coming into today. I was just looking for some confirmation. So you can see, actually, it's interesting. On Friday, I know I didn't make any videos last week. I'm going to do a better job, hopefully, in the near future of making sure I'm consistent every single day. But unfortunately, last week I wasn't able to do that. But I'm going to keep working on it. And anyway, you can see how we had this series of down close candles. The opening price of that's your order block. You can see it's like the same on all the time frames. So you can also mark it out as the wick of the order block. Just depends how you want to do it, but essentially it's the final move down before a larger move up. That's your order block. You can see how the market respected this. So I'm going to call this a 4-hour order block. This order block, which happened right after filling this weekly fair value gap. So what does this tell me? This tells me that this is very possibly going to be a buy model. And so that's kind of what I was going, that's the mindset I was going into this morning. We're possibly in a buy model, potentially getting a move. So just take what I'm saying with a grain of salt because I'm still trying to get better, but potentially getting a move back to previous day's high. That's kind of like my short-term draw on liquidity. And then from there, we'll see what happens. But you'll note that this is actually also, if I go to the 2-day, you can see how we have this giant candle range, and then you have a 2-day close back within that range. That's essentially that's a 2-day CRT. So candle range theory is essentially when you have a giant candle range, and then the next candle that forms after closes back towards that range. It tells you that with a high probability, you're going to go at least to either the midpoint or the other side of the range. In this case, I would probably just for sure go with the midpoint, and then from there we'll see what happens after that. But anyway, here you can see there's your CRT midpoint. So this is where I think the market could be drawing to in the short term. And then from there we'll see. I think it very possibly could be a move from IRL to ERL. You have a external high here. And then IRL just means a fair value gap. So the market moves from fair value gaps to highs and lows. So right now we're respecting this weekly fair value gap. Possibly we could be drawing towards this external high here. All right. So it's a possible move, right? But for sure, for now, we're just saying, hey, possibly drawing to previous day's high and the CRT midpoint. So that was kind of my bias going into today, and so, it's interesting because I actually called the entire daily range like exactly today, which is crazy. And I'm like, I keep getting better and better at it, which is awesome. But first I want to note, actually, you might find this interesting. If you remember, I made a video on the Reaper fair value gap from before, but essentially, it is the fair value gap in discount of a breaker. So you can see how this fair value gap is within discount of this. See that? So there's your Reaper fair value gap. And yeah, kind of found that interesting that the market actually respected that right there, which is pretty cool. But that's not what I was going to show. What I was going to show is going into the morning, I was thinking, okay, like what could possibly happen? So let me show you my thoughts going into the morning. So this was my high time frame analysis going into this morning. I was saying how this is possibly a buy model. And then what I noticed is we had a new day opening gap, and we had this daily manipulation level and this session distribution level that essentially overlapped with each other. And it was right around this low here. So yeah, we had a new week opening gap right here that the market was finding support at. You can see that right here. The market did find a temporary support there. We didn't end up getting S&T or anything there. And so I was suspicious because I was thinking that the market could possibly be drawing to this new day opening gap below this low, because all the session stat map and the daily stat map, the daily manipulation level on the daily stat map and the session distribution level on the session stat map both kind of overlap, showing that we could go to that new day opening gap. So let's talk about that on the chart here. So here you can see and mark out that new day opening gap. You can see that down here. So I said this before it happened. It's crazy, like genuinely crazy. I said I think the market could be drawing here. So here's that new day opening gap. And you'll note, let me turn on the stat maps here. So here you have that daily manipulation level. This is what I marked out before the market even came here. Daily bullish manipulation level. So if you don't know what stat map is, it's essentially your statistical levels. So on a bullish day, you statistically go to this red line and go to this green line. On a bearish day, you typically go from go to this red line and then distribute to this green line. And so then you'll note that the session one, and it's nice because you compare it with like certain liquidity. Like in this case, I had this low over here, and I'm like, okay, well, statistically, we often go and distribute to this to here. So what liquidity is over there? We have this low. So I was like, this could be a good low to target. And you can see we did end up going to that low. So now as well, I'm going to turn stat map back on just so I can show you the daily distribution level. Here you can see the session stat map. We went to that daily distribution level here. Boom. Okay. So there's your session bearish distribution level. And then let me turn that off. So you can see we had both of these right here. We had draw on liquidity right here. And then at this point, I said I was writing in my every morning I'm having to have myself do daily profile analysis, and I noted that we had New York PM and London close nearby to each other, and that seemed like that would be a possible draw, especially because on the higher time frame I was bullish. So I'm looking for bullish draws on liquidity. So what I want to have seen, I wanted to see some kind of low get swept. The most obvious low to get swept was this low here, and that was overlapping with all those stat map levels. Once again, we were respecting this new week opening gap, but there wasn't any SMT there. I was suspicious of it because we had that sell side level right below, and then eventually we did go lower and go into that new day opening gap. So at this point, I said, I think it's possible that we could be getting a New York reversal daily profile, where we reverse in the end dog before distributing up to take out London and PM's highs. I said this at 6:28 a.m. This is before everything happened. I can see this being a New York reversal daily profile where we reverse in the end dog before distributing up to take out London and PM's highs. This is way early in the morning. What ended up happening? We went down into the new day opening gap, and then where did we go? Right to London and PM's highs. Crazy stuff. So I actually did catch a trade. I caught a 2-to-1 trade. I figured this was a buy model at this point. So here you have this, and then here you have this. And here you have a 5-minute fair value gap. Yeah, this was a 5-minute fair value gap. Now, at the time, I thought it was a good trade, but I was a little frustrated because I thought it wasn't going to work out, and it kind of made me mad that it came down a little bit. But I stayed strong, and I just let it be. So once this 5-minute candle closed above here, that's where I entered. Stop loss at the low of the original candle that created the fair value gap, so right here. So stop loss goes right there. Stop loss right there. And came down. I was really kind of annoyed, but I was still holding. There was nothing I could do. Yeah, these stat map levels really saved the day. And then we came up and ran all the way up to London's highs, and this was a 2-to-1 trade for me. Copy traded on all my accounts, so I was really happy about that. And you'll note as well, we just had really good trendline liquidity up here, and with this in line with the higher time frame bias, I really like this trade up to London's highs here. So you can see there's that low resistance liquidity. That's when low resistance liquidity is just when you have a trend line of lower highs, typically that gets ran through with force. And so, yeah, you can see we went right back up to that. We ended up going up to PM's highs as well. But you'll note, where did we stop? Where did the market stop? Guess where it stopped? Your statistical distribution level, right above New York PM's highs. So yes, we had hang on. What was I saying? So yes, we had previous day's high all the way up here, but in the short term, we had these two pretty strong draws on liquidity, and then we had the daily distribution level that was right above these two draws on liquidity. So the market ended up just taking that out, and then the market was content for a bit. It chilled out, came back down, and you'll note, where did it come back down to? Didn't it just come back down to a random spot? it came back down to, if I measure the opening price of this 2-hour candle, here you can see that. Drag this out. There's that white line, and here, boom. You can see here, we pushed down into this 2-hour order block. This was the low of a buy model here. So 2-hour bullish order block. Here you can see we got this formed a low, and then let's see here. We had SMT with this low here. So that was a nice confluence. And then you can see the macro started here in the PM session, distributing us up to, eventually we distributed up to this 5-minute fair value gap here. So that's where the macro took us to. And then, I don't know if there was a trade in here, but I'm just showing how it's all connected, right? That 2-hour order block. And then, yeah, we had SMT with YM at these lows here. And then you'll note here, we had a buy model. I actually had another trade in here. So let's talk about that. So here you have a 5-minute breaker block right here. There is the breaker block. There is the fair value gap. Okay, that overlapping area, that's your high probability area for the market to have a short-term bottom, right? So here you can see we had a buy model form, and we had the low form within this fair value gap here. And so a trade that I took, that was a 3-to-1 trade. This was a really nice trade. Was we had this BPR here. So I noted that we had pretty clear close above here. This was a 1-minute CASD. I mean, yeah, it was just a really strong close above. And then we left this really good BPR here. We were delivering from a breaker block for value gap. So with that all in mind, this BPR is a solid entry point right here. So this BPR, because we're delivering, remember, delivering from this breaker block for value gap. It's all in line with the higher time frame, and the higher time frame is bullish, remember. So okay, there's that BPR. And so what I did is I entered here, and we had London's highs. Let's see where it was here. Yeah, we had London's highs right here. Now, I don't remember if I targeted London's highs or this high. I think I might have just targeted this high. I can't exactly remember. But just had the stop loss just a little ways below the BPR. And then, yeah, that was a 3-to-1 up to London's highs. I'm not sure which I did, but either one of these would have worked. Here was a 2.5-to-1, so it's nice because this is in line with, this buy model is in line with just like this buy model, which is in line with the higher time frame buy model. So anyway, now let's talk about the 2 trades I took this morning that weren't as good, and then we're gonna also talk about a trade from, what was it, Amos. We're gonna talk about a trade from Amos. That was the only trade I saw on Twitter. So yeah. So here we get an SMT. And then here, lower time frame SMT. So I just made a video on this. It's called a stacked SMT when this happens. So lower time frame SMT, higher time frame SMT, and then we had really good low resistance liquidity here. So I wanted to see this get taken out. So there's a big lesson I learned from this actually today. And it's going to be incredibly valuable for you guys, hopefully. So here's that S&T with this high. And then I can't remember if one of these was with YM, but either way, there's two S&Ts. And then I took two different trades within this here. So at this point, I figured this was a sell model to go take out this trendline liquidity here. And here you can see that sell model. Boom. Boom. Let's see. And so this fair value gap, I knew once this broke, we'd probably aggressively move towards this low resistance liquidity. So this 30-second inversion seemed like a good inversion to take. I ended up taking this on just one account. In hindsight, this probably would have been a good one to copy trade. Probably should have copy traded it, but let me make sure. Let me go to my journal real quick. I'm just making sure of something real quick. I don't know where it is, but it's fine. So anyway, we had equal lows here as well. So, I mean, okay, I don't know for sure if I should have taken this copy trading, but I for sure should have, if I was in this trade, I shouldn't have entered a second trade, which that was not something smart that I should have done. I should have only done one trade at a time here, probably. Anyway, the idea was I want to see this LRLR get ran, but I was taking profit. My initial take profit was at this low here. And so a huge lesson from this trade. So this ended up being a break even. This 30-second inversion ended up being a break even. And in this case, I wanted to have my stop loss up here just because it made a little bit more sense in the context of this trade. And so, anyway, I was looking for this low to get hit. But why was this a bad low to have your final take profit at? Because you get a situation like this where you run all this LRLR, but you don't have any. Once you get down to here, note how when you're here, all the way down here, there is no more LRLR to take out. You already took it all. So you have to take all off at the end of the LRLR. A lot of time you will continue down and run this low, but sometimes you won't in this case. Like in this case, you won't. So you have to take all off at the end of the LRLR. Or if you're going to shoot for this low, you need to move stop to break even, which I did, but then I got stopped at break even. So in this situation, you're only shooting for not that much further. So just take all off at the end of the LRLR here, and you're going to do a lot better. So huge lesson from that trade. It was a good trade, but I need to take all off at the LRLR. So just understand, if you have a consolidation like this, they're going to get stopped out at the lows of this consolidation, not at this low over here. They're going to get stopped out right here. So you want to have your final TP at the end of that consolidation. So incredibly valuable. And then let's see what else. So yeah, I wanted to see this get hit. And I mean, there will be a lot of situations where that does get hit, but here that ended up getting stopped at break even. And then the 2-minute one I took. So this, unfortunately, I did copy trade this, and it just wasn't. It had to be a break even trade. It was a fine trade, but I needed to move stop to break even, because I'll show you why. So we had this 2-minute inversion here. I guess we closed really, really low. So that wasn't super good at this point. Probably not worth taking. Honestly, it's definitely not worth taking at this point, because you have to stop all the way up here. Not exactly sure what I was thinking when I took this, but just a valuable lesson to learn here. I really wanted this LRLR to get hit. I definitely shouldn't have. If I was already in a trade, I definitely shouldn't have taken this. But whatever. Just a good, valuable lesson here. So same thing. We closed below. Actually, it was this fair value gap right here. We closed below this 2-minute fair value gap. So I can anticipate with a high probability that this LRLR will get ran. But that's it. That's all. That's all I can anticipate. I'm not expecting this low to get hit. Just the end of this consolidation. That's it. And so you can see right after this 2-minute inverses, we then go run the low of this low resistance liquidity. I need to take all off there. Or at the very least, move stop to break even right here. Because at this point, like when you're all the way down here, you have to ask yourself, what other liquidity is there to take out? This is where all the people are gonna get stopped out. So there's no more liquidity. So you have to move your stop to break even at the very least if you're targeting this low. At the very least. If not, you definitely want to just take all off here because that's the end of the LRLR. Take all off at the end of the LRLR. You're always gonna do better doing that. So lesson is don't shoot for this low here. And yeah, I just shouldn't have taken this trade, but you live and move on. So, all right, with that, let's talk about a trade from Amos. Let's get rid of all this. Let's talk about the trade from Amos, and then we'll talk about a trade from Jan as well. So, trade from Amos here. Never quit something with great long-term potential just because you can't deal with the stress of the moment. He's absolutely right. Just got to keep pushing. Not give up. Just don't give up. No matter what you do not give up. Here you can see, essentially, the main idea here is we're in a downtrend. We're going into the 450 to 1510 macro. So, and then here, my guess is what he's doing is he's trying to take a tiny move within the larger move. And so this is essentially an order block, like this final move up before a larger move down. So he's measuring out this as an order block. And then once we close below this old fair value gap here, that's an inversion. Stop loss, he just puts stop loss at the high here. And then we go run down to this low. And you can see here that this is an order block as well, so we retest that and then go down here. Not really a trade I would take, but it's cool to see other people's styles and just learn from people. And yeah, just he likes to do 1-to-1 just in the context of the higher time frame. So awesome trade from Amos. Let's look at that real quick. 15. It was let's see where it was. See, I wouldn't even mess with shorts when we're in this higher time frame buy model personally, but when you're scalping, you can probably do that and be fine. But looks like it happened at around 14.55. Yeah, here we go. So we have this final move up before a larger move down. Measure that out here. So this is just like a higher time frame OB. And then delivering from here. Then we have a 1-minute close below here. This is where he entered. And he simply targeted this low here. So nice job, Amos. Amazing trade. And yeah, I think that about covers it. Jan's trade. We're gonna talk about Jan's trade. So there's that. Nice 1-to-1. Awesome within the context of this sell model here. But let's talk about Jan's trade. So lastly, we have Jan's trade. So he took a classic 2022 model where you have sweep, structure shift, The way I kind of see 2022 models now is it's essentially just a breaker for value gap trade, right? Because what is this? This is a breaker. This is a fair value gap. So help me with the 2022 model. I just kind of don't use it. I just only use breaker for value gaps, and I usually end up seeing all the 2022 models anyways. But here you can see we swept out this high, closed back below, validating this as a breaker block, push up into this fair value gap here. That's where we entered, and then boom, right down to the true day open and New York PM's lows here. So where was that? That was still on the 5-minute. Here you can see this breaker block. So we were reacting off the daily distribution level as well, which could have been an additional confluence. But here you have a breaker block. Remember, we have London right here. So we're sweeping out London size. And then we're sweeping out PM size. Yeah, I personally, once again, I'm not, if we're in the higher time frame buy model, I'm not personally going to be shorting, but I'm just showing you could take this trade if you wanted to. And then PM size. And then here's that. Make that purple, make that red. Turn it off. And then, yeah, we sweep out both of these. We sweep out this internal high here. And then hit that daily distribution level. You can see that happen right here. At which point, we get a 5-minute close below this breaker block, the series of down close candles. This 5-minute close below validates this as a breaker block. So I would personally see this as a breaker block for value up trade. I know it's a 2022 model as well, but this is just to help me like see trades like this, because I personally like once you see breaker block for value up trades, you can't they're like basically 2022 model, but with another confluence, with the breaker block confluence. So, and then you have this fair value gap here, and then you can see the rest was history. You go short here, stop above the breaker, or above the high if you wanted. But I usually, when these types of trades, I usually put stop above the breaker because you get better RR. And then you can target all kinds of different lows. You have, this is the most obvious low. Personally, I would just target this. Or you can target this as well. Actually, I'd probably just target that. So this would have been a nice 3-to-1 risk reward trade. Really, really good. Or maybe if you wanted to, just target the end of this LRLR and get a 1.3-to-1 risk reward trade. This is a really good LRLR as well. So, yeah, this is a really good LRLR. Awesome trade from Jan. Good job. Yeah, look at how good this trend line is right here, right? Really, really good LRLR. And then here's the same thing. So maybe I would leave another runner to go to this LRLR as well. And boom, that's a 3.3921 risk reward trade. Awesome job, Jan. With that, I think that about covers it. I will see you guys in the next one. Bye.